Good day, traders. This is Roger Scott from Market Geeks with another video tutorial for you. Before we begin, I'd like to remind you to visit Market Geeks for your free swing trading report. And don't forget to subscribe to our channel for trading videos and trading tips. A few weeks ago, I wrote a short article describing how to use swing trading indicators. The one indicator I focused on was the RSI, or the Relative Strength Indicator. You can find the article and the video on our blog at marketgeeks.com. After I posted the article, I received several questions and comments asking for further examples so that traders could get a better feel for using this method to swing trade. I wrote this tutorial. In this tutorial, I will outline the steps I go through to apply the divergence method to stocks in more detail. The first step that you want to do is adjust the RSI indicator from 14 days to 10 days. The RSI indicator was originally developed for trending commodities and applies to stocks as well. The indicator was not developed originally for swing trading, but for longer-term trend analysis. By adjusting the time period from 14 days to 10 days, the RSI becomes much more responsive and dynamic. These two qualities are very important when selecting swing trading indicators. The next thing to do is find stocks or other markets that are making a minimum 50-day low coupled with RSI reading of 20 or lower. You could see what I mean by looking at this graph of Amazon stock. The next step is to continue to monitor the stock. You can give the stock up to a month to make the second low. The second low must be below the first low, but the RSI indicator must provide a higher signal than the first one. In this particular case, the first RSI signal was 20, even while the second RSI low bottomed out at 29.43. If the market trades lower than the second low, the pattern is invalidated. The most frequent question I get asked when and how to enter the actual trade. Fortunately, this is the easy part. You simply wait for the stock to trade above the high that was made on the second down day. I typically give the stock above 5 trading days and place a buy stop about 25 cents above the second bottom day. Remember, if during this 5-day period the market trades below the low that was made on the second bottom day, the trade is invalidated. You can see by looking at this particular example that the stock rallied almost immediately after making the second low. Make sure you place your buy stop 1/4 or few ticks above the high that was made the day the stock made the second low. The next step, assuming you're filled, is to place a stop loss order 2 ticks or 1/4 below the second low day. You can leave the stop loss order as a GTC order, a good till cancel order, so that you don't have to re-enter it daily. Always keep a list of your GTC orders or have your broker send you a daily list of all your GTC orders. They are easy to forget and can cause you serious financial risk that could easily be avoided in the first place by being careful and monitoring your GTC orders. Assuming you successfully entered the trade, you must measure the distance between your entry price and your risk level. Once you do so, you simply multiply this by 4 and add it to your entry price. This is your profit target, and I recommend you follow the 1 to 4 risk level formula to assure a positive risk to reward level across your trades. If you're trading large positions or using this method to trade futures or currencies, you can take partial profits at 3 times your risk level and partial profit at 4 times your risk level. Most good swing traders provide at least a 1 to 3 profit risk level on all their trades. Some things to keep in mind trading the RSI divergence method. First, don't forget to change the settings from 14 periods to 10-day periods. Otherwise, the indicator will be too slow to respond to short-term swings. Also remember that this method works just as well to the short side as to the long side. The RSI is overbought at 80, and that's the level you want to use for your first swing low. That's it for today's tutorial. Don't forget to visit Market Geeks for your free swing trading report and additional trading videos. Please subscribe to our channel for trading videos and trading tips. This is Roger Scott wishing you all the best in your trading.